Okay, so the market has absolutely roared into 2026, hitting record highs right out of the gate. But you know what? If you're just looking at the headlines, you are missing the real story. So we're going to go under the hood and see what's actually driving this bull market. With the stock market hitting all-time highs, it's so easy to think, hey, the roaring 20s are back. But is that really what's happening? Well, while the headlines are definitely glowing, the reality is a lot more complex and, frankly, a whole lot more interesting. All right. So here's our game plan. We'll start with that roaring open to the year. Then we'll dig into this dramatic and, honestly, kind of weird shift happening just below the surface. After that, we'll find the true engine powering this thing, identify its surprising fuel source, and then we'll look ahead to see what's coming next. So yeah, on the surface, everything looks fantastic. The first full trading week of January saw the big indexes, the S&P 500, the Dow Jones, not just gaining ground, but actually pushing into record territory. It's this wave of optimism that's pretty hard to ignore. But, and this is the crucial point, just because the whole market is up, it doesn't mean everything is moving together. No, beneath those big flashy headline numbers, a massive, almost violent reshuffling of money was taking place. And just look at this chart. It shows the huge gap that really defined the week. You've got the Russell 2000, which is all about the smaller companies, and it absolutely crushed the S&P 500. Now, this isn't some tiny little shift, a spread of over 300 basis points in 1 week that shows investors were aggressively yanking money out of the mega cap giants and pouring it into these smaller players. And this timeline just perfectly illustrates what was driving that rotation. It wasn't random at all. It was a series of major news events. On Monday, a geopolitical event smacks energy stocks. Then Wednesday, all that tech hype from CES deflates, hitting the chip makers. Then Thursday, boom, a policy announcement from the White House sends housing stocks through the roof. Every single day created clear winners and losers. You can really see the two different stories playing out here. On one side, you've got companies like Builders, First Source, and Home Depot just riding this powerful tailwind from the housing stimulus. But on the other side, tech giants like AMD and Apple were facing serious headwinds. Everything from deflating hype to really concerning sales numbers coming out of China. It's like a tale of two completely different markets living inside of one. So all of this leads to the big question, right? If there's so much chaos and churning happening internally, what in the world is holding the overall market up at these record highs? What's the engine here? Well, the answer is actually pretty simple, but it is incredibly powerful. Corporate earnings. The market isn't just floating on pure speculation. Nope. It's standing on a solid bedrock of real profits. Expectations for how much America's largest companies are going to make have literally never been higher. And check it out. This isn't just some rosy forecast or wishful thinking. It's built on a really solid foundation. The data clearly shows that for the past couple of years, companies have consistently delivered record-breaking sales and profits, and that creates some serious upward momentum. And believe it or not, it gets even better. It's not just that companies are selling more stuff. They're also turning those sales into actual profit more efficiently than ever before. These forward profit margins are also hitting record highs, which means the whole corporate machine is just running incredibly smoothly. Okay, so if record earnings are the engine, what's the fuel that's keeping it running so hot? The answer isn't buried in some policy paper or a central bank decision. Nope, it's in demographics. It's about people. We are living in what some people are starting to call a gen-shaped economy. Forget about K-shaped recoveries for a second. This theory says that the real story is the immense economic power of the baby boomer generation. And their power, it comes from this number, over $80 trillion in net worth. I mean, that is just a staggering, mind-boggling sum of wealth. It's so much money that they can't possibly spend it all themselves. So what happens to all that wealth? Well, a lot of it flows down. As this quote points out, a huge chunk of that money is being used to give a crucial financial backstop to the younger generations. Helping with rent, down payments, just daily expenses. And this is why it all matters. This quiet, but incredibly powerful demographic force helps explain why consumer spending has been so resilient, even with all the talk of inflation and economic uncertainty. It creates this sturdy foundation of demand that powers the entire economy and ultimately drives those record corporate earnings we were just talking about. So the big takeaway here is that last week's wild rotation wasn't some kind of a sign of weakness, not at all. It was actually a sign of a healthy market that's adapting, with investors moving their money into areas that are benefiting from specific policies and these deeper demographic trends. So looking ahead, you're going to want to keep a close eye on three things. First, the upcoming CPI inflation report. A hot number could stop this whole rally in its tracks. Second, earnings from the big banks are coming up. And third, really listen to what those banks say about the health of the American consumer. Their guidance is going to tell us if this momentum can keep going. And that leaves us with one final provocative thought. Right now, the market seems to be powered by two incredibly strong forces: record-breaking corporate profits and this massive demographic wave of wealth. So with such powerful engines driving it forward, the real question becomes, what, if anything, can actually get in the way?